What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 5th of 2018. Well, folks, it's time for a trading tip here on the DataDash channel, and today we have a really important topic to discuss in regards to crypto markets. As many of you might have noticed in my most recent videos, I've been talking a lot about a key term known as market cycles. And seeing as we've gone through a huge run-up as well as a huge correction in Bitcoin and other altcoins, it's extremely relevant. So first and foremost, I want to specify that we're going to be covering a lot of things in regards to market cycles. Predominantly, I'm going to first start off by answering the question of, Nick, what is a market cycle? Stop using all this mumbo jumbo financial lingo on me and tell it to me straight. So I'll go ahead and answer that question for you guys as well. But along with that as well, for those of you who understand market cycles, many of you might be wondering, Nick, I understand market cycles, but how do they apply in crypto markets? What key trends do we find so we can utilize these trends in order to do better on trading and investing? So I'll be talking about that and much more, guys. We have a lot of interesting things to discuss on this. It's a little bit of a larger topic, so bear with me on this. However, it's an extremely important thing to know if you're going to be trading and investing in these markets in order to be successful. Again, it's my take on it, guys. It's a little bit subjective, but these are the main key trends that I keep on finding in regards to market cycles. So, first and foremost, to answer that first question, many people out there might be asking, Nick, what is a market cycle? Well, the term itself is pretty self-explanatory, and it matches what we see in not only markets in general, but generally in life. Things go through cycles, and markets which are humanly driven, which are things that evolve over time with the surrounding underlying currency or asset or traded item that's under that market, it evolves over time. So, for example, businesses go through cycles. Markets, like the stock market, go through cycles, usually around every 6 to 8 years. And just like those traditional markets, crypto is the exact same. Bitcoin has immense rallies over time. For example, in 2017, we went from $1,000 to $20,000 at our peak, all the way down to $6,000. And now we're looking like we might be going towards another rally. So this is a good example of cycles. Things go up and down over time, and it's due to human emotion predominantly. That is going to be the key theme that we talk about in this video, and understanding human emotion and how valuable it can be in regards to predicting when the next run-up is going to be, when a market is peaking out, not picking exact top or bottoms, but getting a general idea of when things are too good to be true and when things are great opportunities to get greedy and buy in. So let's go ahead here and take a good look at this wonderful chart. It's always tossed around. It's almost kind of generic at this point. But it's so funny because as generic and as overused as it is sometimes, many of you might have seen it on Twitter and other social media or maybe other YouTubers talking about it, it is extremely true. It's almost one of those hidden gems that is just tended to be very true in practically all markets. So this is a Wall Street cheat sheet that talks about the psychology of a market cycle. And they put it in plain English. They don't use a lot of complex terminology. They show how over time, when a market has remained relatively quiet but is starting to pick up a pace, you start to see disbelief, hope, and a little bit of optimism coming. And then you get towards a parabolic or exponential period where you see optimism, you see belief, thrill, and euphoria come into a market. Exuberance, as I like to call it here on the DataDash channel. People get excited about things. They start taking more risk. And this is exactly what we saw in Bitcoin over the course of the fall and winter of 2017. We saw not only a steady rise up, which alone could speak for itself in Bitcoin throughout the first part of 2017, going into the summer and into the early fall. But when fall and winter came around, we saw a parabolic run-up for Bitcoin. This is when the exuberance kicked into high gear. You see the price going almost straight directly up, and it just seems like it's never going to fail. It's hard to bet against it. And this is always tended with new markets like Bitcoin that are extremely volatile, extremely speculative, and people get excited about the potential behind the technology. And then you have an opportunity to see the price start to correct, and you hit towards a period of complacency. This is where people think, oh, don't worry about this, sharp correction. We're just cooling off for a little while. We're going to head back up to new highs. And then an eventual downturn filled with anxiety, denial, panic. We use the term FUD in this market, fear, uncertainty, and doubt. A lot of worry starts to pour in, as well as capitulation, where people tend to make the mistake of selling at the bottom. They got carried away riding the wonderful ride at the top, and they never thought that things could go down. And then you have a period of anger and depression, and why did I make this mistake? And getting caught up in the emotion tends to leave people with a very negative outturn in the end, where they're hitting themselves, asking, "Why did I do that?" Well, it's because most people don't learn about this. As many people might say, Nick, this is over generic. This couldn't just be this. It couldn't just be this simple. It really is sometimes, folks, because people do not learn from the past. They don't learn how to cut out emotion in these markets, and that's why, for example, when Bitcoin went down to 6,000, we saw dramatic panic and kind of a sense of giving up from people who were Bitcoin maximalists, people who bought into altcoins and were going up and up and up. And then when they see a correction, they give up on it. There's a lot of people in the crypto space that have left as of recent and from December, January, and February. So again, this has tended to happen, guys. Many people don't learn about it, but if you can learn about it, you'll be a step ahead of the game. So enough kind of going off of the chart here. What are the steps we see in market cycles? We now have an understanding, at least, of what market cycles are and what they look like in cryptocurrencies. But how do they actually apply in crypto? What are the signs we see in the different phases of a market cycle that we have to look out for? Well, I have a very, very simple list of 3 major trends that you find in an overall market cycle. Because really, guys, again, we don't want to overcomplicate this. We don't want to do a lot of crazy technical analysis because a lot of this is sensed within the momentum of price. But there's 3 major parts of what we've seen in the past major cycles in regards to cryptocurrencies. Now, again, this has tended to change over time, and sometimes there will be additional phases, but this is what we've generally seen in regards to the structure of cryptocurrency markets, or at least what I've been able to analyze. So first and foremost, you have what's known as an entry of liquidity. Again, there I go using complicated financial terminology with words like liquidity. Basically, liquidity in simple terms is cash. It's money, an entry of new money into this market. And usually what we see is that money coming in and investing into predominantly Bitcoin, because Bitcoin is the first point of entry of liquidity into this market. As we want to see cryptocurrencies and the value of cryptocurrencies go up, as well as adoption, people need to purchase cryptocurrencies. They either need to have a stake in order to use those cryptocurrencies. They either need to have a stake for investing or trading and speculating in general in regards to crypto valuations. So they're going to need to go through that gateway to get into Bitcoin. We tend to see that a lot. For example, that's what we saw through the greater part of 2017, going all the way into December from January, the 20x of Bitcoin. And then what happens is, if we take a look here after December, we started to see a correction of some sort. We started to see a little bit of reality come back in for Bitcoin. And a lot of people who had entered that liquidity into Bitcoin and done very well. However, you would think that in some rational mindsets, you'd sit there and say, okay, time to maybe take some profits, or maybe understand that, yeah, we're probably going to go through a correction of some sort, and rationally act in that sense. But again, guys, when we're talking about human emotion and markets, especially in early markets like this, people get greedy. You have to understand that in these markets. And because of that, when Bitcoin stagnates, we tend to find that altcoins rise as a kind of a reaction from the correction or the stagnation of Bitcoin. Now, why is this? Well, because people have an obvious opportunity to go ahead and take more risk. Altcoins tend to be very low compared to Bitcoin after Bitcoin's had a strong rally. And if you have an opportunity where your Bitcoin is not producing the same returns as it was before, and you have all these cheap altcoins that provide an abundance of opportunity yet higher levels of risk in return, well, humans tend to take it. They go back to risk taking, just like they were with Bitcoin in the first place. But they increase that level. They start betting on all different types of altcoins. And we see this. If we take a look, for example, during the mid to late part of December when Bitcoin started to correct, look exactly at what happened to the other market players. And we can even take a large one like Ethereum. Look at this. Right towards the end of December, we start to see a parabolic run-up going in through December and January. Take a look at, for example, Ripple, for example, had a huge rally, much like it did of the past year back in April, May, and June. So we have a massive parabolic run-up in these short periods of time where people take excessive risk. They're flushing out all this capital from a multi-billion-dollar currency into the altcoins because they want to make more money, they want to take more risk, and they get greedy. And that's why some people get stuck buying at the top here too late, and they start holding the bags of people who bought down at these low levels. Again, look at the volume down there, guys. That's when the institutions buy in. They buy on lows. They buy when things are cheap, where taking risk is something they can afford to do, and it's a better bet for them comparative to just holding it in Bitcoin. So Again, you see the trend all the time, guys. Cardano, for example, had a massive rally. You have all these different cryptocurrencies that have come up and done really, really well during these periods of time. So again, we see the stagnation or the sell-off in Bitcoin, initial sell-off, and it might hold relatively strong, but again, a lot of that liquidity and that valuation, it exits out. And we can see this in the chart here. Bitcoin used to hold 90 to 80% dominance in the market, but now over the past year, we've really seen a decline in that with other coins, coins out of the top 10, as well as just general other altcoins, starting to gain dominance compared to Bitcoin in the greater scheme of things. So we have periodic cycles. It's very important to realize these guys. But the biggest one is that over time, once Bitcoin has reached peak exuberance, we have altcoins come in. This is exactly what happened in December, where we had, within 1 month, one of the craziest times for valuations in crypto to rise up. Completely ridiculous. So after we reach the peak euphoria, after Bitcoin has gone up and had a slight correction, but then altcoins provide an even better opportunity. They're going up 5, 10 times in some cases. The punch bowl is completely full. Everyone's having a party. They're having a great time, and they think nothing's going to go wrong. Investors, traders, and speculators take profits. The institutions, the smart people, usually the people who are playing with bigger money and understand human psychology, when everything's going good, they start to lock in profits. They get to sell things at the relative top. And because of that, you are going to see a decline not only continued in Bitcoin, but also in other cryptocurrencies. And I don't even need to bring up the charts. You guys have seen it for yourself in this market. There has been a serious decline in altcoin valuations because people locked in profits. They took it back to Bitcoin, and some of them have cashed out, but some have just been holding it in Bitcoin as well. And Bitcoin has obviously been trading at lower prices. So this is really what we saw in 2017 and into the early part of 2018. It's very common to understand this, guys. There is a period of exuberance, and then exuberance can make up all the difference in just a few days. This is how market cycles work. Going back to that chart, we have the periods of happiness, of excitement, and then also the periods of denial. And this is how they apply in crypto. We usually see a period where new money enters into the market, the entry of liquidity. And this is going to come in different shapes and sizes over time. So what we saw, going back to this real quick, I just want to go over and just kind of recap on these. In the entry of liquidity, over this past year, we had a lot of new money enter into the market. And this was through retail investors, through hedge funds, through venture capital funds that overnight had turned into crypto funds. And what really caused this? What sparked this? What was the catalyst that we talk about here that really brought this to reality? Well, if we turn back my drawings here, I'm going to go ahead and show you guys a very important trend that we saw going over a more than 3 year period, which was the cup and handle that Bitcoin had from its peak in 2013 all the way over here to March of 2017. This is a very common technical pattern on for a bullish uptrend for the long term, for serious outbreaks. And the fact that it had been building up for 3 years, and the news of the technology started getting up, people started talking about Bitcoin again, and people started understanding the potential of what blockchain could do, you had a massive rally in regards to the price of Bitcoin and other cryptocurrencies. So sometimes it's a technical catalyst, and sometimes it's a fundamental catalyst. Something new is coming up. Something exciting for Bitcoin could serve as a new entry point for money. And what could that be for the next market cycle? Could be for the next periodic run-up. Because if we take a step back here, we've gone through all these 3 major steps. We've had the period where people take profits. We had all the periods of entry liquidity, as well as Bitcoin stagnating and altcoins going up. What could be the next catalyst that makes Bitcoin, for example, go from $11,000 where it's at now, all the way up to 40, 50,000, maybe even 100,000 one day? Well, maybe it might be the introduction of a Bitcoin ETF. Now, for those of you who don't know, a Bitcoin ETF, or an exchange-traded fund, for the acronym of ETF, would be an opportunity for institutions to get a piece of investing in Bitcoin. Many of them from investment banks, people who play with hundreds of billions, if not trillions of dollars in total, they can't invest in Bitcoin because it's not in the shape of a financial instrument they're allowed to trade or speculate on. And with a Bitcoin ETF, this would open up the floodgates for companies like JP Morgan, Goldman Sachs, all these investment banks to get a stake in Bitcoin. And the buying side action could be massive. So you can already see that there's a lot of attempts of this. Direxion, Granite Shares, First Trust, the First Trust ETF as well as VanEck, and all these different companies, even the Winklevoss twins, who were supposed people who are debating over the founding of Facebook with Mark Zuckerberg, they've gone out trying to create these Bitcoin ETFs. And I can tell you all that they're going to probably be created this year, which could serve as the catalyst for this next run-up. So again, we look for catalysts ahead of time, guys. That's one of the kind of tips I'm going to give you here in just a second. But we look for that entry of liquidity, and once we have that, we know that, okay, we've started into the market cycle. Let's go ahead and bet on Bitcoin for the short term. But we have to prepare for the fact that Bitcoin eventually will stagnate in most cases, and that the money will flow into more high-risk plays, such as altcoins. And then eventually, after that, we have to come up with a game plan, a strategy, once we've entered into that part, into taking profits, not getting too greedy and not getting caught up in the emotions. So this is generally how market cycles work. Notice how I didn't do any crazy TA outside of the cup and handle, guys. Sometimes you don't need to do TA. Sometimes it's strictly on fundamentals. But applying simple principles like buying low and selling high and things like that can be very helpful. And here's some key steps that I really want to kind of drill in that I've talked about in the video, but I really want to summarize. First and foremost, cut out current emotions, guys. Do not get caught in the, mistake that so many people make of getting caught up in their emotions of the market. This is, again, the mistake that people make when there's the period of euphoria. And for example, the mistake that many people in this market were making who were Bitcoin maximalists, who were crypto maximalists, and now the prices were down, in the case of Bitcoin, to 68,000. They said, it's done. It's over. The technology is not going to come back for 2 or 3 years, or it might never come back. The market is over. It was a Ponzi scheme. Everyone just tries to yell out things to rationalize what's going on because they don't take the time to understand how fundamental markets work. Second off, look for both positive and negative catalysts. Again, catalyst is a kind of generic term. Whether this is something that we can see well ahead of time, in the case of possibly a Bitcoin ETF to enter a new liquidity, or a black swan event, just recognizing that something holds significant importance and could be that entry point of new liquidity. And also the reason that things start to go down. The FUD, for example, that comes into the market, the headlines that start to stir panic, whether they're fundamental or not in regards to being negative for that given market. It might just be speculation and talk. It doesn't matter. You have to look out for the catalyst, both to the upside and also what could end the market cycle to lead people towards taking profits. And last but not least, guys, always stay 2 steps ahead of the market. Again, as we were talking about, understand that what cycle you're in and understand your strategy for the other 2. Now, of course, it's going to be a little bit more rough because you can never tell what's going to happen a few months ahead of time. Remember, a month in crypto is like a year in the real world. Things are moving like crazy. So because of that, we have to understand, though, that as much as we can, we need to look ahead and understand the next steps that are going to be coming in regards to these market cycles. And I can tell you all, I know many people out there talk about wanting to day trade in crypto. They talk about wanting to trade, on the hourly chart and, trying to play these really small term trades. But I can tell you all that for the average person who wants to get into trading, though there is no guarantee of return, I will tell you all, you're much more guaranteed to do well in swing trading the cycles of the market. Understanding simple principles like buying low and selling high, and understanding that in periods where people are tended to get exuberant or get fearful, it's probably better to do the opposite of what the masses are doing. So again, guys, that's it for the video. Again, I'm going to leave a link down to this chart down below. You guys can study it. You guys can pray to it at night. You can learn from it. And again, apply this emotional reading on markets. Picture it as an emotional gauge on humanity in ties to whatever market you're looking at, because history tends to repeat itself. And the best thing we can do, I think, is learn from it so we can hopefully, in a sense, benefit from it and do better for ourselves. Anyways, guys, that's it for the video. Thank you guys so much for watching. Let me know what you guys think about in regards to market cycles in crypto. Do you think that the 3 key signs that I found are what is tended to be common in markets for cryptocurrencies and markets in general? I think it's the common case for Bitcoin and other cryptocurrencies, but I'd like to hear what you guys think down below in the description. Anyways, guys, that's it for the video. Thank you guys so much for watching this trading tip, and I'll see you guys in the next video. Stay tuned.